All right, welcome back to the FX Titan Lab. This is going to be a quick pre-market analysis and trade recap for the trades that I took last week, and a little bit of insight of how the market's going to move this week. All right, so let me start with Forex Factory. So last week on Friday, we got non-farm payroll and unemployment news, and predominantly we saw that the US economy was doing pretty great. And what did that translate to on our charts? Now, when we look at our charts, we can see that. Now, this is I'm going to use gold because gold is one of the pairs that I like to trade. So as you can see, this was Friday, right? From this area here, this area here. This was all price action for Friday, and as you can see, earlier in the morning of Friday. I remember I woke up at around 4 or something. Then I spotted this area here. So this was the area that I had expected price to get back to and sell. But then what happened is that at around 8 a.m. I saw this reversal happening, but then I was like, no, I'm going to wait for my level to reach. But anyway, price kept on to go lower and lower. So then after that, at around 2:30, price had created this new level here for re-entry. And what did we see at around 3:30? Price kicked in, hitting the limit order and taking out early buyers at the same time, and we just kept on going lower. And well, there was also another entry level here at around 4 something and 4:15. 4:15, after this NFP report came in, though there was this area here that we could have rented in that. And after that, price just kept on melting to the downside. So 3:30, then at 4:15, 4:14 actually, and not 3:45. This was another area to re-enter at. You would always just have to put your stop loss just right above that NFP week, and that's usually how you trade after the news. Usually, price comes back for a re-entry, if at all, well, according to how you have interpreted the price. Now, the interpretation of this news in relation to price was that the U.S. economy was strong. Yeah, with one black digit number, and predominantly we had 1 and 2 digit numbers. So this is strong. Yeah. So that means we are supposed to look for shorts, and also look at this. Price had actually already warned us about this, and usually for me, a quick warning is when I see my zones get taken out, then eventually respected. Now, even if this level got respected, price first wicked out this level by we can just say it's 50 pips. Yeah, we can just take it as 50 pips. So usually when price does this to some of my levels, I just know that that level is going to get taken out. So that's why I was trying to look for sell positions all along. And it's the same thing that was happening with Bitcoin, because I remember I also had a position like this in Bitcoin, and well, what happened? Price wicked below it by I think it was like 100 pips, and then eventually price came back to it. So as you can see, again, it did the same thing, and this was like on Friday when we were having that saga of Trump and Elon. So there was a massive sell-off, and also, the U.S. economy was doing great. So most investors and institutional traders were taking money out of these these assets like gold, Bitcoin, and were taking the money and putting it into stocks, and that's the reason why we saw a huge surge in stocks. So this is what happened in Bitcoin, and we see that this level is sorry, that this price is still going up, but uh, let me see. This is just by the way, but I don't. I don't want to fixate myself on Bitcoin. There's just a few things that I need to understand about this pair before I go head deep into it. But usually when this happens, it shows that this logo is eventually going to get taken out. So I'm just going to wait for something, because even if I'm just say it's, yeah, you see it's even wicked below this validation line. It went below that, the lowest tick of this week, as you can see. So still on Bitcoin, I still expect price to first go a little bit lower before we go higher. Cool. What do we see on gold? Let's use FX Open. Let's use FX Open so we can get this a little bit better. Okay, so on FX Open, well, we had expected to see after gold broke out of this resistance, this trend line, resistance level. We had expected that price would come, give us a clean retest, and go higher. But then what did we see? We saw, I guess I'm going to remove this, and eventually I'm going to remove everything, okay? What do we see? What did we see? This was some trade that I took, and then price first took me out before it went higher. So I missed out on this trade here, but it's whatever. It's whatever, because the skill stays with me. And this just means that there are just a few things that I need to refine and keep moving. And as long as I was able to catch the sell trade on Friday, that covered me. But just that, okay, I'm seeing that it went a little bit farther than I expected, because actually I actually had it in the back of my mind that if at all price comes and gives me an entry from it was around here. Yeah, it was around here. Yeah, it has the potential of going up to, yeah, it has the potential of going up to like 1,000 pips actually. But anyway, I think it's already 1,000 if we're to judge it by, if we're to take it from this, or do we take it from this, even that it's already 1,000. I'm just I just wanted to get these 1,000 pip trades. Another level that I had marked out for a buy opportunity, but then the problem is I slept in, but this was the zone that I was waiting for a buy position, and actually we can see that already price has stepped into it. Okay, but you know what we're gonna do? We are going to start everything afresh. So let me do this. I'm going to clear this chart, clear it off of all drawings, and we go from the monthly, and we do our top-down analysis, and we get a clear picture of what the hell is happening right now. Okay, so I remember earlier on in some earlier videos, I had already made I'd already told you guys that gold price is looking a little bit weird, given the fact that we are still in the internal range of the April monthly candle. So you should understand that first of all, we are in an internal range of liquidity, right? So let me put this at the highest tick of this wick, and same goes for this as well. I'm gonna put this line at the lowest tick, of that wick. Okay, so that's how it's going to look like. Oh, and we see that the month of May, yeah, the monthly candle of May on gold, and it's kind of like the same thing on in Euro USD. Quick look, as you can see, it's still within the internal monthly liquidity range. Boom. Okay. So let's focus here. Okay. We can see that the month of June, the one that we're currently in, opened bullish, and we see that price attempted to push price to push higher and higher. But then what do we see here? We see a big what? Rejection wick at the we see a very big long wick at the top. And what does this indicate to us? What does this mean though? What does it mean uh if at all were to go to the lower time frames? It means that we are going to see rejections on the lower time frame. So if at all were to scale down to the daily time frame, okay, what do we see? We see a huge rejection. We see a huge rejection. And where did this month open at? This month opened at, this is June. I think this was the candle. In June. This one. Yeah, this was a candle. Okay. So we can currently see that price is tapping into the it's going into the open line, and partly that's why we're seeing this kind of projection. But then again, this level that it's stepping into is this gap here, this gap that was created on what on Friday, uh, on 30th May 2025. So I'd already seen that price would want to come back to this level here and give us a level for re-entry, and uh, well, a better trade, so we can re-enter this market. But then I had marked this level instead because this was the actual level where resistance turned to support. So this was the actual level that I wanted price to get back to and give me a proper entry. Well, anyway, I can see that price stepped into it. Oh, or it has barely missed it. Let me see something on the 15-minute time frame, because I think I had marked it on the 15. Yeah, it was this one above. But then the range was too big. The range was too big, so I had also really want, but then I really had my real entry right here, because I think it was 30. Yeah, I usually like having my my areas of invalidation, or my stop loss area, to on gold to be below 40 pips. Yeah, I don't usually when it goes to 50 pips, that means I'm just going to have a sloppy entry, and sloppy entries most of the time just cost you a lot of money. Well, and we can see here anyway, prices stepped into this first level, the first flip zone, and we can see that price is now changing the character to the upside. And I wish I saw this. Would I have really capitalized on it? Let me see. Well, there. Okay, it's still too early. It's still too early. And anyway, this, the value price is doing this right now. I feel like this could just be a short-lived move, and I want to see. I really want to see price come back to this level down here instead. So let's do this one more time. Sorry for that. One more time. Rejection. Long wick. It represents rejection on the lower time frame. So lower time frame. What do we see? Going down to the 1 hour time frame. 1 hour time frame. What do we see? How did the last week? How did last week close? Last week closed with price shifting, as you can see. As you can see, this bearish button is, as you can see, it's right here. Okay. So what is this called? This right here, this is where price transitioned. So I'm going to call this a transition area, and this is the area where right around here, where price now shifted. Okay. And now this area here where price shifted, it left for us this bearish area of liquidity. Right. Now this area is probably is ideally a zone that you would want to get some sell trades in. Okay, so let me remove this. I don't want to make things too complicated. Now, our job, if at all we are to look for trades within this zone, our job would be to pick out a proper bearish level that we would get in at. But then right now, the only zone that I see that is viable would be this one at the top here. Again, another area where resist further support and resistance. Anyway, and here the reason why I'm not picking these areas here is simply because these highs create an area of low resistance. And areas of low resistance have a tendency of getting themselves, taken out easily by the market. Even this area here. I don't want to pick this area here because this area originated from this zone here, and already this area here didn't lead to any significant break of structure to the downside. Okay, so with this in mind, the reason why I'm picking this zone here is because this high here led to a significant break of this immediate low right here. And when we talk about areas of resistance, we're talking about areas that, let's say for this context, we're talking about highs. If at all you see highs cluttered up together here with no breathing room. Yeah, and breathing room, I mean like inefficiency, a fair value gap, for example, because fair value gaps attract the price to the level. Price doesn't really react to the fair value gap on the higher time frame. Maybe those lower time frame fair value gaps at areas of entry, and strictly at areas of entry. That's when the fair value gaps have relevance. That's where we can maybe use the inverse fair value gaps and all of that. But here, now this having a level with breathing room, and yeah, breathing room, and proper confirmation. This at least shows that area right there is viable. And anyway, you can also see here this is a bullish example of what of an area of low resistance. And anyway, what do these areas tend to lead to? They tend to lead to trendline liquidity, and that's how trendline liquidity in a way essentially gets formed. Okay, so this would be an area to consider some sell positions, but again, keep in mind by the time price comes back to this level now, price would be above the monthly and the weekly line. So uh you would have to be really careful if I told you to now take a trade for sales within this week, because if at all price is above the monthly and the weekly open line, this would show that now price is what and that the trading environment favors buyers more than sellers. So if it so there's a possibility that this area here will get taken out, but uh keep things a little bit. Yeah, so anyway, there will be a possibility that this area would get taken out. So there could be maybe some short-term sells, because anyway, so the high time frame bias is for this thing to be bullish. So anyway, if at all this anyway it's still a draw on liquidity, it's still good to have it marked out. Now we can shift now our focus to this zone right here. Okay. Given the fact that we are still above the monthly and the weekly open line, that means that the trading environment is favoring uh, buyers at the moment. Cool. And what do we see? We see that price now has shifted. I think we had like a little transition at yeah, I think the transition was right here. Okay, this was a transition. And to get a proper shift, I need to see the, well, if you're doing, you take it from the 15-minute time frame, it's kind of like as if there's a shift already. The transition is already a shift in a way. But for now, the area for re-entry that I could see would be this one right here, because anyway, it's the one that led to the breakout structure here. So it would allow them to have that there, like here. I could just have, or what do we see? That's only 12 pips. That's only 12 pips right there. How does it look like on the one in the 5 minute? The 5 minute, it looks like that. Looks decent enough. First, we could, if it hold anyway, it holds, we could ride this thing for a quick 100 pip movement, and essentially would hold to this bearish area of liquidity here. And that's a big assumption. So it's like a big if this thing holds to this area. It's like from this low right here to that area here, it's like 600 pips. Okay. So yes, we opened gold, traded lower. I could have gotten to this trade, but then the problem was I would have got it like at around 3 or something. But then I woke up at 4. I woke up at 4. And anyway, it's fine. Usually at around 4 and 5, price tends to reverse that initial move that 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 it began with an opening. That's what I've seen. And yeah. And yeah, well, how does a weekly time frame look like? Mm. Now on the weekly, there's something interesting that just so I'm going to still delete all of this shit right now. So there was something interesting that I saw on the weekly time frame. On the weekly, we saw price of the previous week push down with a little no wick at the top, and then we saw it closing with a long rejection at the bottom. And the next week we opened and we pushed bullish, and we're looking very good apart until the NFP came in and all of the drama that was going on with the fundamentals and we saw price being pushed lower. But what do we see right here? We can see that the previous monthly the previous week we kind of still closed bullish and anyway, already taking the liquidity above. Given the fact that price had already taken the liquidity to lower, the single case, it still looks bullish to me. And we can see that now this new week has opened with a wick at the bottom, and now we're trading high. Okay, and looking at the area where I've put my potential area for re-entry, which is right around here. I want to see something. I want to see something. Let me see. If at all, I have my area for re-entry right here, and I go to the daily. How does it look like? Huh. By the time that this thing would be bearish again, but let me see how it looks like on the weekly. Weekly. It'll also be the candle would be still bearish. How does it look like on the monthly? The monthly would still be bullish. So okay, fine. The monthly trumps the other time frames. So this could be an area to consider. However, if I don't now take it from if I don't now consider the monthly time frame as the yardstick to tell me the true trend of the market, and for me to take trades that make sense, I would now go to the 1 hour time frame. And what do we see on the 1 hour time frame? We haven't yet done any significant price movement. Okay. And the other area of re-entry is kind of like pseudo to me. It's not so real. And as you can remember, there was still an area that was unfilled down here. Okay. There was an area that was unfilled within this zone here. So these are still things that I have to keep in mind. But no, okay, fine. Given the fact that anyway, it already tapped some level here, so I'll just yeah, it already tapped that level. So it's fine. I'll just have this area here. I'm going to put this on, and we are trading into this area here. Having this into this bearish area of liquidity. And if at all price respects this zone, then well, we can go higher. If at all it violates, we go lower. How is your USD looking like? Your USD on Friday, I remember we had the similar setup. We had the similar NFP setup, and as you can see, right here, well, it was looking like this on the. It was looking something like looking perfect on the 15-minute time frame. So at around 2:30, price created this zone here where resistance, where support turned to resistance, and what do we see? With NFP happening, price came and just that it just went just slightly above the highest wick of this candle right here. But if at all you had your stop loss like maybe at around 10 pips, you would have still survived and taken prices lower just like that for like 50 pips. But I chose gold because gold was more rewarding, as you can see. So right now, we can see that price stepped into this zone right here. But I'm not yet 100% convinced. But I'm going to just have this. I'm just gonna have this thing play out, and I see. Because it's still Monday. The good news is that, well, Monday they aren't any news. It's just bank holiday after bank holiday. And even Tuesday we have nothing at all. Nothing that we should, at least, have ourselves worried about. It's only Wednesday and June that prices, sorry, that price might act a little bit weird because we kind of have CPI after CPI after CPI. And then Thursday and Friday will come with the PMI reports, prelim, you consumer. I think this is the PMI or PPI or something like that. Friday. But yeah, long term gold, I'm still bullish, but just that, man, it's when price does such things here, sometimes you get disappointed. Price takes some time before coming to your area. When it does, it maybe misses your nice entry level that you would have wanted to get in at by like 60 or 50 pips. Then you have to now get, but if at all you don't give up, you can just find an area for re-entry and ride out the trade. Then USD JPY, there was something interesting that I saw. Let me start this thing with the monthly. Okay, so USD JPY, we can see that the candle was turned bullish, the monthly candle was turned bullish, and there is a long rejection at the bottom. And we can see that price is trying to play back into this area of liquidity that we had marked some time back in around April. We can see that price is trying to shift back up to the upside. Now, let me use a cleaner chart because I want to tamper with my analysis right there. Cool. So I'm going to use a Wanda. So we can see that there was some sort of daily area liquidity that was created right there. There is this area of liquidity that we have for sales, for actual sales to happen. I just knew that price will still eventually come back to this zone, given the fact that it did this, just wicked above this area here, and it just didn't respect the rules of a bearish market. If at all we're bearish and we're trending bearish, the highs get respected. The highs get respected. If at all we see a slight violation of a given area, but then after that, maybe price falls into the intended direction, most of the time that area gets taken out. And then anyway, usually that area still is a weak area. So you see this high, it didn't lead to a proper break of structure below here with a wick, but it only did a wick to wick, as you can see, just wick below, and then price started to shift directions to the upside, transition and shift to the upside. Okay, so now this area here becomes a targeted high, and also here we have an immediate high, which is also going to become a targeted high. Okay, so let's scale down to the 1 hour time frame and we see what the hell is going on here. Here on Friday, let me look at. Yeah, anyway, so here I'm seeing that price. Yes, anyway, it's happening just like how I had already marked out this chart. So I expected that price would now, on open, would see price trading lower and lower into this bullish area liquidity. As you can see on the daily, the area that I'm considering is this one right here, this immediate daily area liquidity that was created after NFP. And I'm going to scale down to the 1 hour time 1 hour time frame. So this is my daily shelf. Now within my daily shelf, I'm supposed to look for ideal uh ideal proper bullish areas of liquidity. Okay, so what we see here is there was this zone here. This zone here stood out to me because of the wick movement of the candlestick movements here. Anyway, well, we can see that this area tapped into a demand zone perfectly. So yeah, this would and anyway, we created this other zone here and led to the purchase structure. So this would be the area that we would look out for to get some levels for proper buy entries. Okay, so we're within the daily shelf, and I'm scaling down and down so that I can get a proper area for re-entry. USDWR for buys this time. I chose this, but I'm seeing that there was this level above here. Well, no, this was actually this was a what? A fair value gap. This is a fair value gap right there. That's why I marked it with this box. As you can see, it's a fair value gap box. So this here is the proper area for re-entry, because as you can see, support and resistance strength support, and it was barely retested. So this will probably be an area where price gives us a sniper level, sniper entry, and we take prices higher. And for context, I would probably have a stop loss of 20 pips, or I can take it to 30. But there's no reason for price to take out these. But just for risk management's sake, I will probably have my area here. So this is 143.029 entry for USD JPY. So currently we are seeing a price is retracing down lower and lower. And I'm expecting that by the time price comes back down here, we will get a nice rejection on the lower time frame. That we take prices higher and we target higher liquidity. That's only if God. But then again, by the time price comes back there, this will be a bearish candle. Hey, but you know what? I can just wait and see. The weekly, the weekly, the weekly is still bearish, right? But then still bullish at the same time. We haven't taken the liquidity that is resting above here. Okay. So these things kind of like need a sharper eye, to see them. But anyway, as you can see here, we haven't taken the liquidity. And then the week is already bearish. It's already the price is already trading below the price. So by the time price comes back to this discount zone, there's a possibility that the strength of the sellers will be exhausted. So, and also anyway, given the fact that we have a strong bullish area of liquidity within this wick here, there's a probability that price will follow high time frame structure, and we take prices higher. And how will that look like? That will look like a super long wick on this weekly candle, and then a bullish, a bullish type of candle going pushing prices to the upside. So that's what it's looking like. Bullish area liquidity. We're taking prices to the upside. Though we're first retracing into this area of liquidity, and that's what it's looking like on multiple time frames. Okay. there was something that I saw on CAD JPY, and it's around the now this is around news trading. Is it this one? Yes, this was the area. So usually I've realized that most of the time, before news happens, after all, we're already trending, right? Most of the time, okay, fine price will hit both sides. Let's see it properly in the right there, TP30. Most of the time, price will hit both sides, but usually there's always an area for re-entry. Now for this one, you would just use this. Let's just keep it simple using the theory of the wick breaks, the wick break of strength and all that. When we see price fail to break above, to break. No, this was a case for price, trying to break below. Now see CPI first of all. No, NFP, sorry, NFP took prices lower, but then we see that we had a failure to properly break below these wicks down here with a proper wick to body break after that price was pushed higher. Now usually there's a possibility that price usually comes to to retest that zone where, for example, here support turn to resistance. We come back to test that zone right there to confirm that we are still, maybe within the general channel. And anyway, when the price action coincides with the previous trend, this is always usually a continuation of move. So you don't have to gamble on the news, because look at that. If at all you gambled on the news, you would probably be getting only like 30 pips. What the hell is that? What the hell is that? And maybe, okay, fine, because this is now for the case whereby you put your stop orders below and above the highs of the price, the 50-minute time frame. So look at that. You're only getting 30 pips. But if at all you were just patient, if at all you were just patient, you would have got clean up price action. You would have just gotten here. And it's not that complicated. Usually just price just comes to retest these zones. It just does something that it just does over and over and over again. And then boom, you just get in like that, and you ride price for a full 100 pips. 100 pips. Look at that. Look at that. And you can try this with any other pair that has decent price action. Look at that. Boom, 100 pips. Here on news, you would just be gambling to catch a 30 pip move. Like why? Yeah. Anyway, so this is what it's all that I had right now. USDJPY. What the hell? USDJPY thing. Was I analyzing another pair? I think it was Oanda. Yeah, so USDJPY. I'm expecting price to first come back down there, and we see how price reacts at this low. At this demand level right there. If at all we get a proper shift like this to the upside, well, we can take prices higher. If we don't, we can chill out. gold, gold again. Right now, given the fact that it is already up into this zone here, and it has done the confirmation of pattern, we can wait for a retracement into this zone right here that I already showed you. You can screenshot the whatever it is, and and just and just by looking at this is kind of like, this is only 12 pips, and if the gold price comes back and taps into that level right there, we can expect prices to go higher. Though just that I'm just a little, just that, well, the 1 hour hasn't shifted properly, but looking at the 15 minutes and the 30 minute, well, it's kind of convincing. So this is still a good trade to just look out for. So, and first area for take profit would be this 100 pips. At least price can give you 100 pips on this thing. But in the event everything goes well, we can take it to like 500 and 600. But this is not conclusive yet because the week has just started. It's still Monday. And price is just still fresh. Okay, so this is it for now, and I'll see how price rolls out, and I'll keep you guys posted.